Bitcoin is a relatively new asset class, and the market for Bitcoin is subject to rapid changes and uncertainty. Bitcoin is largely unregulated, and Bitcoin investments may be more susceptible to fraud and manipulation than more regulated investments. Bitcoin is subject to unique and substantial risks, including significant price volatility, lack of liquidity, and theft. Bitcoin is subject to rapid price swings, including as a result of actions and statements by influencers and the media, changes in the supply and demand of Bitcoin, and other factors. There is no assurance that Bitcoin will maintain its value over the long term. ARK strongly encourages any investor considering an investment in Bitcoin or any other digital asset to consult with a financial professional before investing. All statements made regarding Bitcoin are strictly beliefs and points of view held by ARK and/or podcast guests and are not recommendations by ARK to buy, sell, or hold Bitcoin. Historical results are not indications of future results.
This is Bitcoin Brainstorm, episode number 21. Cathie, I don't know how many years we've been doing this, but I'm just so thankful for this partnership and just doing this. So thank you, Cathie.
And we're grateful you have brought us all together, Rod. You are the glue.
Thank you very much. David, good to see you as well, man. Today's topic, we're going to be talking about quantum, which is honestly on everybody's mind. And honestly, Cathie, in your Big Ideas 2026, you guys kind of jumped right into quantum and the risks associated with it, as well as the opportunities associated with it. For everyone listening, kind of what do you want people to walk away from to start, like listening on the quantum as it relates to Bitcoin?
Yeah, we've obviously thought about it a lot. It's impacted the price. And we've been thinking about quantum for a long time. Our chief futurist, Brett Winton, has to think about quantum. What's the next big thing? And as you mentioned, in Big Ideas, and I encouraged Brett to do this, what he did was he analyzed how quickly the quantum movement is taking place. We try and understand learning curves using Wright's law, which is a relative of Moore's law. And he concluded in Big Ideas, it's on at arkinvest.com, Big Ideas 2026. He concluded that if you use Google's progress, and Google is one of the most advanced companies when it comes to quantum, that the learning curve of quantum is half as fast as Moore's law. And if it continues at this pace, and this is as measured by number of qubits and rate of decline errors, if it were to continue at this pace, then we wouldn't have to worry about this until mid-2060s. If it somehow, and typically learning curves don't change this much, but let's just say it were to speed up to something like Moore's law, every 18 months to 2 years, that kind of cadence, then we might have to worry about this in the mid-2040s. Now, the reason, and so we kind of put it to bed that way, and still the market kept coming at us. And I think David's going to explain this a bit. There are different flavors of quantum. One of the reasons we were comfortable with, this really, it's not for quite a time, we'll have to worry about it, is because AI is moving so quickly and astonishing all of us that we said, wow, AI is going to get us to some of the places we thought we were going to go with quantum faster. And yet quantum kept coming back. And one of the things that got my attention was, okay, if roughly a quarter of the network or the wallets are at risk, then based on today's network value, market cap, there's a $400 to $500 billion opportunity for some cryptographers here. That is a huge incentive to accelerate quantum. And so I am completely open-minded just with that recognition, and have been looking forward to this discussion, Rod.
Yeah. David, is there anything else that you wanted to add on, as Cathie mentioned?
I guess incrementally during 2026, we've seen we touched up on the progress on neutral atoms, which seems to be more optimistic, and although it doesn't permit for short-range attacks, it seems to be scaling faster than superconducting, which is Google's technology. So this one could have a base case of Q-Day a little bit in a shorter time frame, going into the 2030s or so. There's also seems to be incremental progress on error correction, especially during 2025 to today, relative to the past. And also, the Google paper, I think what scared the most people is that in the highest optimizations, they theorize could, allow for fast clock or very quick sub 10-minute attacks on the network, which presents an existential risk as opposed to just attacking dormant coins.
So then let me ask the group this then. When we hear like quantum's a threat to Bitcoin, what comes to mind first? Is this like an engineering problem, a governance problem? And maybe I'll start with you, Adam, and then kind of go around the room.
Well, I mean, I think it's the post-quantum signatures are relatively well understood. There's a NIST standard, a couple of algorithms published in October 2024, which is pretty recent in terms of the evolution of this. For Blockstream, we actually recruited one of the researchers that got the hash-based signature back on track, PhD Mikhail Kudinov, because we figured, well, let's, if we're going to do some quantum research in post-quantum signatures, let's have somebody who's, at the bleeding edge of that add to the team. So we did that, and then we published some survey paper on hash-based signatures, which we think are the most conservative and therefore what Bitcoin would want to use. And more recently, put a proposal for further optimized version of that, tuned for the Bitcoin use case, which is the shrinks and shrimps. As a concrete proposal, we implemented it in Liquid, which is a Bitcoin layer 2 that inherits most of its code base from Bitcoin and has some track record for some years of, I think, 3 or 4 different features that came to Bitcoin as opcodes years later of having them first. So it's kind of live value testnet for Bitcoin opcodes, if you like. For example, it has some Covenant opcodes. It had SegWit first. It had the Lightning time lock feature first and that kind of thing. And for example, the ARC protocol was implemented on Liquid first because it had the covenants, right? So we thought it's a useful test bed. And, we put that really to the Bitcoin ecosystem for feedback on the parameters, because you can tune it in a few different ways where it takes slightly longer to verify the signature, but they're slightly smaller. So there's all these trade-offs, right? So it's really now in a kind of zone of technical consensus, where you look to the technical ecosystem of applied cryptographers with expertise in Bitcoin security models and cryptography to comment on that. And we think that has a reasonable, probably the best candidate. Now, of course, there are also lattice-based cryptography, which we are looking at as well. And there's a whole raft of new ones. I think the other point is, even for the short-range attacks, there are potential ways to handle that, which is in 2013, I proposed something called committed transactions, which introduces 2-stage mining in Bitcoin, where you first mine the hash of a transaction without verifying what it's about, and then you reveal to the network, in the next half hour and the next day, the key that allows you to decommit the hash. And using that, you could obviate the kind of short time range attacks, right? Without any new advanced cryptography or techniques. So there's a kind of way to repair that. It's related to a sort of commit reveal scheme, but it uses the mining to do it. So I think it's more generic and simpler. And it has actually why I proposed it has some advantages in improving Bitcoin censorship resistance, because the miners confirm things before knowing what they are, basically. That was the original context, but it has a side effect here of helping these short-range attacks. And then there are other things that can be done later, like, proving ownership of a key with knowledge of the seed for any keys sets generated since 2015 with the HD wallet scheme. So, that's a view on, roughly what we could do. I think, that there is some concern that things take a long time or can take a long time to reach consensus. But, there are other times where Bitcoin had an existential security risk where things were fixed in about 6 hours or something, right? So I think that what we have looked to do, and Jonas talked about this in his Up Next talk, is to minimize the feature set, right? Keep it narrow, keep it as a kind of interim first stage implementation, very little optionality. It's just an opcode for this kind of signature, and push any complex additions to a later stage. This could plug into what Hunter has proposed with Op360. It could plug into Taproot. It's just a signature opcode. And, the more advanced things like this HT-seed-based signature, the two-stage commitment schemes, those could be done separately. Because I think what people want to see is that Bitcoin has a path to having a way for people to opt in to securing their Bitcoin against this, which custodians and so on could look to. And then, we can improve that from there. And the other thought is that ultimately, this is an ongoing area of research, post-quantum signatures, right? So there's a whole raft of new schemes. You shouldn't really use new schemes quickly. A lot of them were broken in the prior phase of the NISC schemes. 5 dropped out in this phase. So really, in the next 5 or 10 years, we may end up with an actually improved post-quantum signature scheme and be able to plug that into Bitcoin too. And it may be that the first scheme is never actually used. So we don't have to, get overly hung up on the efficiency or optimality of it. And I think the other key point is that we should be able to continue using Schnorr signatures while having, an optional spend path to use like the op shrink verify kind of option. So hand it over to the next person to add further thoughts.
Can I just ask one quick follow-up question, Adam? You mentioned custodians. Has the institutional world really impacted your thinking? I know that we have discussed quantum. I guess maybe we discussed it 3 or 4 or 5, maybe 6 months ago. And I do sense institutions have been a little bit on pause with this controversy. Is that one reason that you're really focused on, the potential existential risk and solving the problem now?
Well, I mean, we've been working on it for over a year now. So, the initial kind of survey paper took quite a bit of background research, and then, the proposals, we obviously worked for a number of variants. But certainly in terms of hearing from institutions, I have been, as somebody with, papers, a research and development company with infrastructure experience, we've heard from a number of custodians and investors, and actually been kind of surprised at the degree of concern, right? Because I think us, yourselves being futurists looking at the details and us being deep into the research, we have a kind of more nuanced view. We can evaluate things for ourselves to a better extent, but they do seem to be concerned, and it may actually be weighing on institutional investment decisions from the institutional investor side of the equation rather than the custodians. So I think, from that point of view, it's actually fortunate that we started on that track because, now we're already at a place of being able to talk about a concrete proposal rather than if we were, reactively acting now. So, and of course, the custodians and the institutional investors have a kind of fiduciary outlook. So they will consider tail risks and take them seriously and want to have, an adequate explanation of how they see this tail risk happen, being handled if the expected time frame turns out to be shorter than anticipated. So I think one of the advantages of having, an relatively expedited initial way to protect yourself, to be prepared, is that then it may not happen very quickly in terms of adoption, but if the hardware speeds up, there is a clear thing to do, which is, users can speed up, the transition can speed up. Whereas if you were, starting at the initial phases, then that prospect, I think, is partly what makes people nervous. And so I think, I've seen quite a few comments that Bitcoin developers are doing nothing, which I can't take objection to because we put a lot of resources and efforts into that. There's a team of 9 people of our overall 20-person R&D team working on this exact topic. So for over a year, so that's quite a bit of resources for a Bitcoin company. Now, of course, an AI company has thousands and thousands of researchers, but in the Bitcoin space, that's a big team, right? So,
and I saw, Hunter, you were nodding your head quite a bit. I don't know, you want to jump in?
Thank you. First of all, Adam Back, I'd like to thank you for all the resources that you have put into clarifying the cryptographic background here. I have to say that Jonas Nick's research and Mikhail Kudnikov's and all of them, they have done some amazing, incredible, highly valuable research for the Bitcoin ecosystem for Blockstream research, and we at Surmount Systems and the former sort of like blue team at Mara on Bitcoin. We found that work to be incredibly valuable for shaping our perspectives and understanding of the problem and the solutions. The hash-based signatures paper that Jonas Nick pioneered was some of the best work I've seen in the ecosystem. And I remember one of our researchers just like carrying that around for like a month, and it was always we could talk about. Again, just my sincerest gratitude for all the fundamental research that you're doing, and it is a very high quality and of a lot of value. Also, Shrinks is a brilliant solution. I like it a lot because in the happy path, for the majority of cases, the signatures can be space optimized to a pretty manageable number. 300 bytes is actually not too bad. There's also an alternative figure. I spoke to Jonas Nick about this, 500 bytes for that, and that's only if it's not the space optimized algorithm. If it's more like if you're willing to spend more time on compute than space. I've also, studied your implementations around the liquid based approach, which I thought was very useful. And but that said, I do want a point of clarification from you, Dr. Back, if you don't mind. I want to kind of understand your perspective on simplicity-based approaches, and if you have in mind, like, coupling the solution for PQC with a extension of layer one Bitcoin itself, mainnet. Is there any intention to extend the contract rules with simplicity with say a tap script v2 maybe?
I would advocate for decoupling that because simplicity is quite a big pill to swallow, and so we would anticipate that for that to come to Bitcoin is some years down the road, and that would create a lot more debate where we just used it on Liquid because we have it, and it's a kind of micro-coded way to implement an opcode in effect without having to go to native code and do a soft fork to introduce it. Because one way to typify simplicity is the last soft fork, right? So that you can implement low-level things in the future without that, and then the soft forks are really kind of speed optimizations and size optimizations. So, that was just a convenience for us, really. So, I think what we would look to is libsecp implemented, the main cryptographic library that Bitcoin uses. Coincidentally, it's some of the people on our team are quite active in that project. So we would just implement a native version in there. Obviously, look for external review of the correctness, test vectors, that kind of thing, and propose that. It's convenient. I mean, I think simplicity is a longer term project. Maybe post covenants, for example. I think it's more plausible that we get one or two covenant opcodes in Bitcoin before we get simplicity, even though simplicity would be a general covenant solution.
Well, first of all, that is music to my ears because there is a lot of concern that it the quantum concern could be used as a sort of way to slip in and couple broader consensus changes, and I think this is such a serious concern that we should be really careful to avoid doing that best we can. And so I'm really glad that I asked the question. You answered it really well, and I appreciate that.
I mean, to give credit, that was something that Jonas highlighted in his Up Next talk, that in his view, we should keep it extremely narrowly focused, because the more kind of mission creep you get, the harder it is to get consensus, right? So keep it minimal and look to
For sure.
sort of extended features later, because we can always improve this space over time with, things like the seed-based zero knowledge proofs. That's more complicated, harder to optimize, that kind of thing, right?
Yeah, and that also explains the more recent focus on object shrinks type efforts. The one thing about, so the reason that we haven't been going down the route of object shrinks is because we've been exploring the idea of opcode overloading for the purposes of algorithmic agility and what is necessary to make sure you have the right balance between like context for like, so there's no ambiguity of the script interpretation. But I feel like we're getting in the weeds.
That's one thing I was going to say, Rob. This feels like a Nash BitDevs or any BitDevs around the US where we go so deep and wide on the technical merits. I am actually curious on Rob, like how you're distilling what based on what Hunter and Adam have just been discussing.
No, that's great. I'm happy to maybe just as a half step back, just for the audience at home thinking about the problem with the nature of how Bitcoin is secured is using what's called elliptic curve cryptography. And it relies on this mathematical principle. It's way easier to take two numbers and multiply them together than it is to have a really big number and do the division. Like for the factoring, I see Hunter. It's a high level generalization. It's not technically the exact piece, but at a high level. Yes, Hunter.
When you first look into Shor's algorithm from like the research, they do often frame it as a way to factor numbers. But the thing is, elliptic curve cryptography isn't based on that. That's more like RSA. Elliptic curve cryptography, and I feel self-conscious being the one to explain this with Adam back here, but essentially that's on a different principle called the discrete log problem, and that's more based on like modular arithmetic and of course like the algebraic structure that you get with elliptic curves. And so essentially Shor's is a period finding algorithm that finds patterns in numbers, and that essentially it's sort of like it's so factoring I think is not it's kind of like a category error. It's a little out of
yeah. I'm realizing, Hunter, you'd be a perfect. I actually on the side have a podcast called Magic Internet Math where I've spent the past 8 episodes going through elliptic curves and modular arithmetic and everything. We should probably just have you on and go deeper into those details for sure. But to Shor's algorithm, to your exact point, the reason why we speak to hash-based algorithms is that is a different domain of a problem where quantum computers, there's something called Grover's algorithm, which is being able to reverse hash function, is a different level of efficiency that doesn't quite have the same strength. And to Adam's original point, hash-based signatures have been understood for decades. Like they've been around for a very long time. And so when you think about Bitcoin's development cycles,
longer than elliptic curves even.
So you want to use something in Bitcoin. And I forgot who, Adam, was it your tweet yesterday that lattice signatures are good enough for DocuSign, but not good enough for Bitcoin?
Yeah,
right?
I said it to somebody at a conference and they reacted positively, so I posted it. But it was just a way to say that hash-based signatures are the most conservative thing we know how to do. That paper was in 1979 by Leslie Lamport, coincidentally the same computer science guy that did the Byzantine generals problem, right? So, prolific guy.
Absolutely, yeah. And so when you're thinking about maybe for Bitcoin has a unique problem, Rod, teeing off from your original point about the governance. Like I think we're actually more just in a strict research stage. And when there are things that we lose, though, when we go to, as of this moment, hash-based signatures, things like a multi-signature or even like a seed phrase, this concept of having this hierarchical deterministic key is not clearly understood. Actually, just at Bitcoin Vegas 2 weeks ago, Localhost, which is another research organization, announced they are partnering with Dan Bonnet and Benedict Bunz on specifically researching with the work that Jonas has done and the blockchain research team has done with shrinks and shrimps to make those multi-signatures again. So Cathie, to your point about institutions, there are ways that we view about how do we secure Bitcoin. We have to kind of reevaluate some of these assumptions where a multi-signature is not something that is well understood and how that could be executed today in Bitcoin. And we're in the research phase of kind of teasing that out, as well as hash-based signatures are inherently larger than the signatures that exist today. So when you think about Bitcoin's transaction throughput, 6 to 7 transactions per second, if you're looking at something with the beautiful thing about shrinks is that maybe a traditional signature is maybe 70 bytes, and shrinks can be somewhere around 320. So it's a couple orders of, like, couple bigger. It's not quite an order of magnitude, but that allows you to, if you're thinking in a break glass in case of emergency situation, you could migrate over to a scheme that doesn't drastically change the rest of the properties of Bitcoin, and not trying to load a bunch of other changes like a larger block size or other mechanics. And it's using the most conservative cryptography in a way that we can do our best to try and maintain some of the principles we expect how we use Bitcoin today for institution migration. On the institutional side is just one anecdote. The work I do with insuring Bitcoin and speaking with underwriters, insurance underwriters, either at Lloyd's or other traditional insurance carriers, this is something they're thinking in mind. Because if you're insuring a risk asset, the last thing you want is a fundamental flaw that would cause a network-wide issue, a catastrophic loss, right? I compare it to, that's why your homeowner's policy typically doesn't have a nuclear explosion coverage, because if it takes out the entire state, that's not how an insurance model can reasonably work. And you usually want to have risks that are localized to an individual, whereas in a world with post-quantum, cryptographically relevant post-quantum computer, you would have the entire network at different levels of threat. So these are things that I think overall institutions understanding the migration, how to do it in the least painful way possible, and kind of guarding against like these threats is like a very key top of mind consideration.
Thank you.
Yeah, and I'll say this: there, you touched on local hosts, you touched on Adam, you touched on Blockstream Research, you got Hunter at Surmount Systems. There's so many organizations that are just working on this on their own and then collaborating together to share these resources. So it may not look like, from the outside of Bitcoin world, where what's the one organization that's working on this to solve this? There's many folks, and they're also collaborating, coming up with the best and brightest ideas. And that's what makes, in my opinion, Bitcoin so beautiful. And also, speaking of research, Ren, from Electric Capital, like, I'm just curious on the quantum, threat to Bitcoin perspective, and some of your research that you're doing as well, in your perspective.
Yeah. Thank you for having me on. I think the quantum threat to Bitcoin has a ton of nuance. And I think even quantum computing in itself has a ton of nuance as well that often is not easy to disseminate through like social media or like mass media channels. So, for example, just talking about quantum computing for a moment, most people, their gut reaction is to look at the number of qubits, but not all qubits are created equally. So depending on the type of architecture that a quantum computer has, that's going to heavily affect what we call like the computer clock speed of the quantum computer. So for example, like a superconducting quantum computer has a much, much faster clock speed than the neutral atom architecture. That being said, the neutral atom architecture, because of the way it's designed, it's much more modular. It fits the modern supply chain assembly model a lot faster, which is what is driving a lot of the commercial investment on the neutral atom side, because they're easy to assemble. There's relatively low novel physics that needs to be solved in order for it to hit commercial viability. But the trade-off of it is that the clock speed is actually relatively slow compared to the superconducting approach, which actually reduces some of the estimates that one might have on like short range attacks. And then stepping a bit higher up into the stack in terms of what the impact is to Bitcoin, I think there are like two types of coins. There are coins that people are actively using where the owners are alive. Some of those coins are presumably held in wallets that are vulnerable. There needs to be research and careful development, and also very careful implementation of rolling out post-quantum secure signatures that those active wallets can migrate over to. The trade-off between picking a signature is not easy. There are a lot of trade-offs with respect to the speed of the signature, the size of the signature, and also the lindiness of the signature. For example, there are smaller and faster signatures like Falcon, but they are very, very difficult, and lattice-based cryptography is notoriously difficult to implement securely. The security or like the threat model of cryptographic signatures extends all the way down into the physical hardware level that the signatures are running on. So there are published attacks on previous implementations of like lattice-based signatures, where you can profile like things like CPU usage, RAM usage, and things like that are sufficient to leak enough information about the signature that would render it insecure. So while it probably is good enough for like a DocuSign, for things where you actually have a ton of money on the line, because the thing with the DocuSign is you can always go back and there's like a legal system, and there's opportunity for recourse. With Bitcoin, there is no opportunity for recourse unless you have, I don't know, like 50 gigawatts or like 100 gigawatts in your backyard, which means that the bar for the signature scheme is much, much higher. And then I think the nuance that needs to be conveyed to the broader institutional investor base is specifically that you have this technical problem that the brightest minds in Bitcoin are working towards. There's a lot of different post-quantum signatures that are that people are thinking about. And then there's a process of evaluation that needs to happen within the developer community there to reach consensus. And there is work being pushed in that direction. And I think the message to the institutional investor base should be trying to convey that work is happening. But at the same time, it's a very tricky problem. But then with respect to the old coin problem, where perhaps the owners may not be around anymore, perhaps the keys have been lost, that's ultimately much more of a philosophical problem than a technical one. It's not a question that any single Bitcoiner or any single stakeholder can actually answer, because the protocol is actually very well built to handle situations like this, where I'm sure different stakeholders will have different opinions, and Bitcoin will solve it the way that it always does, which is the markets will signal most likely which side will end up becoming like the longest chain.
There's so much I can speak to on all of that because I'm currently working on a BIP with my former supervisor at Mara called Hourglass to develop a somewhat elegant technical solution to that problem that you were just speaking to. And also, before we go into Hourglass, though, I do also want to speak to some of the points about quantum computers that you brought up, which were very salient. But unfortunately, I think they're only like half of the problem, maybe level one of the rabbit hole. And then when you understand that, like, there's multiple different kinds of quantum computers, and you also understand that not all qubits are the same, and you also understand the difference between long exposure and short exposure attacks, which we clarified in BIP 360. Once you have that understanding, and also you never mentioned, by the way, photonic approaches, which are interesting too and worth noting. PsiQuantum is doing some very uncanny, concerning work there in that regard.
So they're doing progress, but they're keeping it pretty close to the chest, right? Which is concerning.
For sure. Yep. And I actually spoke to their CEO at the Presidio Bitcoin event privately, and I just asked, like, bro, like, are you gonna use your technology to attack Bitcoin? And he was like, well, we wouldn't do that because it would jeopardize our government contracts. And I was like, so at first I was like, okay, that's cool. Okay, I accept that. And I walked away. And then as I was walking away, right, it just hit me. I was like, wait a second. What if the government paid him to do it? He wouldn't say no. And I was like, oh no. We should probably take this a lot more seriously than we really are right now. And because, I mean, first of all, we have to remember that Bitcoin represents an accountability mechanism that is essentially could be interpreted as like a direct attack on nation states' monetary sovereignty. And so, we have to understand the Bitcoin security model as one of like nation state level attacks that these nation states could print money and leverage their entire cybersecurity corpus to essentially, use every dirty trick in the book to make it a non-viable concern against their central banking hegemony. But regardless of that, I do want to also mention that. So when I was saying like half of the problem, so there's like level one there, which we've discussed. There's also two more levels that I can imagine are relevant. So the first level is the fact that does anybody on the call know the two biggest players in quantum computing?
Google and IBM?
No.
Quantum and I don't know the other one.
No.
Maybe you made me pick.
I will tell you, the two biggest players are the NSA and the PLA. And so when we're only talking about American companies, I will tell you that you're looking at probably less than half of the problem because, first of all, the NSA has been working on this problem for multiple decades and spending billions. We know this from Edward Snowden's leaks in 2013 on a program called Penetrating Hard Targets. They were explicitly, at the time in 2013, spending $80 million a year on essentially a program that was explicitly building quantum computers for the purpose of breaking public key cryptography. And from my conversations with people in the space, I've learned that, Raytheon and Honeywell, now Quantinuum, they have both been, along with the University of Maryland and other experts, for a long time, multiple decades, spending absurd amounts of money taking a technology we all thought we'd never really see in our lifetimes into something that we're all talking about right now. And so
Hunter, what university?
University of Maryland.
Maryland.
That was in and that was in Edward Snowden's leaks regarding penetrating hard targets, if you want to look into that deeper. Now, so there's that level 2. And then there's also a thing that a lot of people don't talk about and realize enough is that the hardware is one part of it, but the software and the firmware are also evolving as well, and also marketplaces for quantum computing. And so all of these are marketplaces develop direct monetary incentives to improve the technology. There's also marketplaces being developed for better algorithms, better circuits that are more efficient at solving the problem. That gives financial incentives there to improve and iterate, reduce qubit count, increase various parameters. When people talk about Shor's algorithm, there are a number of variants of Shor's algorithm. It's not just one. That's also important to consider. Another thing, we mentioned Grover's algorithm earlier. I like Grover's algorithm because essentially it shows us the state of the art of how best we can imagine attacking hash-based cryptography. And I will tell you that the kind of quantum computer you would need to effect a Grover's attack on a 32-byte or 26-bit hash is something on the order of a planet, like a quantum computer bigger than the moon. And this is according to Pierre-Luc's research. And so I think it's okay to deprioritize that concern for the meantime. And it also does make sense to essentially base our signature algorithms on the same technology we trust and use in proof of work. I think that makes a lot of sense because, and I think SHA-2 could be probably one of the cryptographic algorithms with the longest half-life. Every cryptographer knows that all cryptography has a half-life. We know that we need to switch from elliptic curve cryptography anyway. And so it just makes sense to investigate algorithmic agility, different ways to upgrade protocols and signature algorithms, and then, of course, comprehensively understand the threat model and the geopolitical landscape, all of this, right? It's a vast, multidimensional problem. The Hilbert space of bad ideas is vast, practically infinite, right? Hopefully all of that clarifies things.
Yeah, going back to what Rob was saying, kind of next step is the planning around infrastructure around wallets, like the HD backup schemes, other things to improve over time. But initially, just get a conservative and compact enough. I thought that was a very key point that Jonas had made as well, which is, it's not ideal, but it's compact enough that you don't have to bundle it with other complex changes like a block size or a SegWit discount or a new SegWit annex or any of this kind of thing. You can, I think, Hunter, you mentioned a few different parameter sizes. There are ways to, use a bit more CPU and get a signature that's 300. If you're willing to if you want to have a faster verification, you can sort of be lazier in the creation work and in the verification work. So there's a tuning there, which hopefully the ecosystem can tell us, review. And then I think the other kind of interesting things, from talking with custodians, one of their questions has been, well, what should we do? And one thing that occurred to me is the HSMs in the field that custodians are using are not frequently updated code. You can kind of see if you withdraw from them that they're using old versions of formats and things. And so I was saying you should probably talk to your custodian about the HSM they're using to get them warmed up to, being ready to update the signature schema. I mean, they don't have SegWit. I think they have SegWit, but like not some formats. They don't have Schnorr. So this is going to be, a time to upgrade the firmware in a HSM to get them started on that track, right? To say, well, let's prepare, put a draft in there just to prove we can do it, because that's work in itself, right? To add that key agility to an HSM, let's say, or check that it's fast enough to verify. HSMs are sometimes relatively slow piece of hardware. I think there's creating the signatures is an interesting question. We might need in some cases, the hardware wallets might be a little slow. So we might need some faster hardware wallet hardware. So probably the people in the hardware wallet space, of which we're one, will be looking at beefing up the CPUs in them. I think the Jade is fairly high spec, but it's a little slow even on that. And some of the other ones are much more constrained for cost reasons, right? So that's another factor. So, things to prepare. And then, of course, there's a whole block explorers and wallets that are using libraries written in different languages. There's work to do. So the reason I was suggesting the HSMs is because I'm thinking about the lead time, right? So, the lead time is getting it opcode, getting reviews, those technical consensus, getting ecosystem consensus. But then the other lead time is, well, how long will it take HSMs deployed by custodians to cooperate with often the HSM is manufactured by, a banking vendor, and the HSM provider collaborates with them to do the Bitcoin-specific cryptography. So, I think that's something with a fairly long lead time. So it's good to check with the HSM, with the custodian, if their HSM vendor is going to be able to react in a timely fashion, right? Because that's something that could be done now to say, let's say that this scheme is standardized on, the parameters might change. They could implement it, for example, to show their readiness and then finalize parameters later, right? So you just want to cut down the lead time on everything, basically, is the way I see it.
Yeah, Rob, as a leading custodian, I'm curious your thoughts.
I think Adam raises a good point on the HSMs, and this may be one thing where Bitcoin is able to somewhat lean on the traditional financial system because banks, DocuSign, whoever else is already looking forward into implementing and integrating some forms of this cryptography. The sooner we get rough technical consensus on the best path forward in Bitcoin, the sooner we can start getting integrated into these hardware signing modules, whether it's on the actual silicon level with accelerators. So it's not just software, so you can at scale operate and run these transactions. It is something that is, I think, the critical stage of the best thing that can be done right now is just scoping out the full scope of the problem, finding out the best solution, and then from there, going to the signing infrastructure, going to the wallet infrastructure is an interesting note, just in the world where this is approaching, really a testament to the resiliency of Bitcoin as this neutral global money. If you had to take everyone today who's in a quantum vulnerable address and migrate it over to a new one, Project 11 put out a report. If you look at like the transaction sizes, it's roughly 75 days, which sounds like a long time, but also at the same time, you're talking about the entire world's money being able to run a software upgrade. Like that's already, like when you get to that place, that's a really powerful primitive. The other interesting thing too is the reason why I think it's this delicate balance of trying to find the correct approach and, not moving too quickly. You don't want to use broken cryptography because, as Hunter mentioned earlier, all cryptography systems eventually break. It's just a cat and mouse game of when the right time is. And when you make that leap, you want to do it as thoughtfully as possible. The one other interesting artifact from that Project 11 report was the Q-day timeline of when these world experts in cryptography think it's going to happen. And they had the optimistic case within the next 5 years was 15%, pessimistic 5%. At 10 years, it starts ballooning up to 49% optimistically. They think one would be available and 28% for pessimistic. I think Bitcoin in particular sits in this unique position of being the first touch point most people in the world ever thought about cryptography with cryptocurrency, right? And the work that's trying to be done now is to, as responsibly as possible, find out multiple levels of being able to make that initial leap, being able to fully design spec it out responsibly, and being able to get there. And I think typically, that's going to serve Bitcoin the best by using very secure cryptography. Bitcoin, has been around for 17 years now, hasn't been broken yet. And I think when we do this next leap, I think we're hoping to have similar shelf life, if not longer than that. And that just requires a lot of thoughtful space in the research domain at the moment to be able to properly scope this all out.
Yeah, I wanted to come back, if I could, to the lost keys topic, right?
Yeah. It's a great point.
So I think it's because Jameson Lopp infamously posted the BIP 361, which caused a lot of controversy. And I think that's because it's too early to have that conversation. So my view is, the key thing is to get a migration path underway. I think with this kind of method where you can spend using current signature types, so you can spend using Schnorr while becoming quantum ready, people can migrate. I think it would be advisable to do that migration in a way where you can see that it's a migrated address type, right? Make a variant or address type where that's visible on the chain so that we can get some data, because I think data helps. And then over time, if we can see what proportion of value or what proportion of UTXOs are migrated, my personal expectation is this is a lot further away, the hardware, than the hardware enthusiasts are projecting. But in any case, if there's readiness, people can migrate. There's no cost penalty to migrating preemptively. That's a good start. And then, once, if and when there is hardware, people can start to migrate faster. But also at that point, if we have data that says 90% of coins have migrated, 95 of, UTXO have migrated, that would probably be a positive surprise in itself that, less keys were lost than people thought.
Yeah.
And furthermore, if you've got a long period of time before it becomes pressing, then I think the practical solution is that ultimately you would fall back on the kind of IETF and Internet Protocol norm that no longer secure cryptography schemes are deprecated. And in the Bitcoin case, that means that you can't spend them anymore. And that becomes a lot less controversial if people have had a protracted time within which to move them. And, a period where there was a relaxed time frame, a period where, there's some initial progress on, more interesting benchmarks. And then I think you would deprecate it. And some other kind of confusion I've seen is that requires a hard fork. No, you soft fork deprecate the key path, or the, a hunter's approach with the Merkle route allows you to kind of select that. And that way, I think you can avoid that risk. Personally, I think that's the only realistic approach. But to have that conversation right now, it's difficult because people are kind of positing each path as theft, right? And using salvage or theft, or they say it's all political. And there's no data and there's no time frame, right? So if we've got the data and it turns into a fairly long time frame, then it's probably the case that people that haven't migrated have simply lost the keys. So then deprecating their ability to spend them doesn't change that situation. And if they have, the post-2015 HD wallet, which is, apart from very early coins, is most of them, then by that time we would, have ample time to do the R&D and add another spend method to spend using a proof that the seed ultimately. And, the other thing that could be done is kind of interesting, which is with these sort of commitment scheme I mentioned, the 2013 idea that you could sort of prove that you control the coin and timestamp the signature in a distant past. So you could kind of reserve the ability to spend the coin without revealing it. Now, that does deprive us some data, but it could preserve privacy for people who don't, want to reserve the right to spend without doxing that they control the keys. There are I'm have some indication there are some early miners with, 50 Bitcoin blocks that kind of like to keep them that way, right? So probably more of those are actually controlled than people imagine. They just prefer the privacy of not moving them, right? So, but of course, moving a key doesn't prove ownership either, right? They can just move them to a new UTXO one by one. There's no particular doxing of who it is or what have you by just moving it from address A to address B in a new format. That's not a tax event or anything. It doesn't identify anything.
Ren, you were smiling a little bit, so I wanted to just see if you had any comments on the social question around as it relates to this. And I agree with you, Adam. I think there's like the technical aspect of figuring it out. I think in parallel, yes, it's a good conversation, but like prioritizing is key.
I agree with Adam. I think that like the top priority is to make sure that there's a minimalistic signature scheme that the developers find consensus around. That gives the network and users the ability to migrate if they choose to, totally up to them, and just make sure is that hopefully the majority of the network is prepared. With respect to the social question, with all social questions, like it's unclear if there's an optimal answer. But I will say that the Bitcoin protocol is structured in a way to allow for max flexibility in terms of what the stakeholders want to do. And ultimately, the way that it will play out is through the financial markets. So if it gets to the position where you have risk of, in the worst case would be like some sort of like fork situation, then people can just vote with their Bitcoin, which path they want to take. And that choice is totally theirs. Like it's not anything that any one stakeholder is going to decide.
Yeah, Rob, you want to jump in?
Very briefly, because I know this is probably its own hour-long dedicated podcast. I would respectfully disagree on the premise of freezing the coins ultimately. This is just my perspective of property rights in Bitcoin are sacrosanct. And I think it's an interesting thing to discuss now. I think definitely the chief thing to focus on is getting the ability to have a migration window and have the technology laid out responsibly to give as much people as possible a path to going post-quantum. I personally just feel uncomfortable about the property rights violations around that. And I do hear and think it's a good counterpoint that having data, and if this path were available for 5 years and it was very well advertised that it was time to make that move, that you could at least better quantify it. There's just something very visceral in how I feel about Bitcoin as a project in the freezing of things. But that's definitely something that won't be solved on today's call.
Hunter, did you have a question as well or a comment?
I have so much to say on all of this. As always, of course. Definitely worth checking out Art Waxwing's private property promise that he's posted on the Bitcoin mailing list. Essentially, the three aspects are coin inflation schedule is set in stone. If you can cryptographically validate a transfer, Bitcoin will let you do it. And if you've locked a UTXO with a certain rule set in the past, the rule set will still be active and let you spend in the future. So you can't be locked out of your own money. So that's important to consider in this discussion, like as like a good philosophical lens and framework. We have to remember that Bitcoin is pretty much equal parts technical, social, and financial. And so we can't just like ignore one aspect to the exclusion of others. That would be a strategic mistake for sure. I also want to speak to some things that Adam Back has been talking to. One is, and also Ren as well, sort of like the lindiness of signatures. I think is important to point out that SHA-2 is it was first published in 2002 as a secure hash algorithm 2, and so that's important to remember. Of course, one-time signatures like Lampert or Winternitz, those came out in 77 and 82, I believe, and so those are also quite old. They even predate Neil Koblwitz's work on elliptic cryptography. I think that came out in 85. At least that was when it was published, and so there's also additionally XMSS and Sphinx is essentially those are also quite old, like 2015 at least around, and so Uh, and we also have to remember that SecP 26K1 had only been around for 8 years, maybe, before Satoshi reached for it in the original Bitcoin client. So it's just all these things are important to consider in terms of the timeline. As far as HSMs, there's a few thoughts in there. So first of all, at Mara, when we were working on the Andro project, which I'm pretty sure is canned now at this point, we had approached and found a very good, very responsive HSM vendor. They're based out of Europe, but they do have hustle in ways that like I'd never seen from other vendors like Thales. And so this vendor is Securosis, and they actually have a BIP340 Schnorr implementation in their firmware, and also support for Crystals to Lithium MLDSA and Sphinx. I think they have support for Sphinx in SLHDSA, but I could be wrong. And I haven't looked at their latest firmware, but they're just like one of the most comprehensive and responsive HSM vendors I've ever worked with. And they're also pretty affordable too, and very flexible. However, there's another thing I want to mention is there is actually hardware acceleration for SHA-2 now. It's called SHA-NI, and it's pretty available on most modern hardware. It's the native instruction version that's embedded in CPUs. Most CPUs have this capability now, and so that's important to keep in mind and realize it results in like a 2 to 3x improvement in SHA-2 computation. So that's important there. Also, Adam, if I could ask you if could you please make sure that the Jade has the new, whatever PQ Jade you come up with, can you please make sure it has a TPM on it, like a proper, like not just TPM, but like a secure element?
We are looking at that topic, yes.
Please do. Like, I mean, it is the one criticism that keeps me putting the Jade on the same level as the Cold Card, the Foundation Prime, the Trezor 7.
It's more nuanced than you might think, because typically the secure element in all, I think, of the hardware wallets, all it does is check the pin and hand the private key to the MCU.
That's correct.
And then how different are you, right? So the Jade is using server-assisted lockout. So arguably, it's easier to sweat a device that you have in your hands than a server that's going to say no and cut you off locally. So it's a bit nuanced, but in the ideal world, we get to secure elements that can sign SecP, or in the new case, can sign shrinks or wherever we end, and that's probably heavier than any of the current ones can do. And actually, on that front, the Trezor group of companies with a Tropic Thunder are actually working on a Bitcoin-specific secure element that they can open. I think the other challenge with secure elements is they tend to be closed source or require licenses to use the APIs and things like that, which some people don't like so much. So I don't know. It's a nuanced topic, but I hear you. It's desirable to kind of have, secure elements and server lockout. You can certainly do both, right? And we have some sort of ASIC in-house capabilities with the Blockstream ASIC team. So we're certainly capable of a secure element is a much simpler thing than a Bitcoin ASIC, which is like very high speed, highly optimized, complex thing. So we're not, currently working on that area, but it's something that could be done as well.
If I could also just add, it would be also really nice if we could get an avalanche noise generator circuit on there as well, like Foundation has, because that gives you essentially quantum tunneling entropy, which is like the best entropy to like to derive your seed from. And the reason I bring that up is actually I recently saw at the Bitcoin conference a vendor that was pushing entropy as a service, like a QRNG too. And I won't name their name because they seem to be very legalistic and also kind of coercive, and it's weird. But it really freaked me out, and I'm going to publish more on this later. But essentially, you're going to see like a number of half-baked solutions that are just they don't understand the problem. And so entropy as a service is a terrible idea. You cannot trust someone else's entropy. And so ideally, it's on device using hardware specifically designed for harnessing what I like to call God's own entropy, right?
I'll say this. I knew this, Cathie, at the beginning of this episode. We were going to go like this and be done, up over our hour. For me, this episode has helped me bring much more relief. I'll say this. You got Adam back, Hunter, Ren, Rob, David, you as well. All these different groups, whether they're funding it, talking about it, working on the technical aspects. Adam, I didn't even know you had 9 folks just dedicated to this. The local host folks working on this. Hunter, thank you for all of your work with BIP 360 and so on. Maybe we would close with like a 30, 60 seconds from each of you. From my own perspective, Bitcoin, even, you may go on Twitter, X, and all these other sources, and it may be like Keyboard Commando, the sky is falling, and so on. There's actually some signal in that, in the sense that all of these different groups are working in their own facets, but also collaborating behind the scenes. You mentioned some of these technical conferences that they're gathering at, discussing and sharing these ideas. Ren, you mentioned Presidio Bitcoin, I think before we started as well. They introduced a quantum paper. So as much as maybe there's not like the typical central organization where they're this one group and one team is going to solve the problem, Bitcoin's so beautiful and magical in the sense that there's all these different groups of teams and people attacking it. Hunter, you said it so well, the technical, social, as well as financial aspects of this. So again, I'm going to get off my soapbox, and I just want to say thank you to everybody on this podcast. And maybe I'll start with Cathie, if you had some thoughts as well.
Oh, I think you said it. Half of the solution is understanding the problem. And I think in the financial markets, I think the most important, the value of this Bitcoin Brainstorm is to communicate to the financial markets that, hey, everybody understands there's a potential issue out there. They're taking it seriously. This global monetary system is too important for us not to consider, to turn over every stone and just make sure that we've got this right. And I didn't understand many of the things you all were talking about, but I am happy you're talking about them, right? I am happy you're talking about them. I think it's really important. So thank you.
Yeah, absolutely.
And I will say, David at ARC has really been educating us. He's communicating with many of the people who are trying to take in the problem and solve for it. So maybe I'll hand it to David.
Pretty much in the same vein as you, Cathie. I love seeing this type of conversation. I think it's the thing to talk about for the foreseeable future. In terms of priority, I'm very happy to see conversations like this continue to go on for the next few years. Let's remove the FUD out of the system.
Totally. And speaking of FUD breaker, Hunter, any closing thoughts as our resident FUD breaker, along with Dr. Back and Rob and Ren?
I think FUD is sometimes useful because behind like every source of FUD, there is a kernel of truth that really you should take seriously and have a good answer for, and not just hand wave and say, oh, that's not a concern. There are two things I just want to say in closing, maybe 3, is that first of all, at Surmount Systems, we are working very hard to carry on the work that we're doing at Mara. I want to hire my old team back, and we're doing the work to do that. So I have joined forces with the CEO of Conduct Protocol. She is an amazing, very talented, very accomplished, highly credentialed female CEO who I want to put in the CEO position. And her name is Dylan Hunsaker. And we're essentially going to be doing our darned best to do everything we can imagine to accelerate the timeline of making sure that Bitcoin is quantum resistant, using evidence and proof and rigorous, high quality specifications that we could bring to the Bitcoin community and have them use their heads, right? And the thing is, I think it's important to remember that the caricature that a lot of people have of the Bitcoin governance is really, I think, not correct. The Bitcoin community is not as intransigent as people say. I find that if you approach people openly and honestly and address the concerns with the exact amount of intellectual rigor and honesty that you need in this delicate and sensitive situation, I think we'll be fine. So really, the thing I want to make sure people understand is that some very bright, kind, amazing, thoughtful people are working on this. This is an all hands on deck situation. And I really want to just speak to everybody in the Bitcoin community, so long as we can agree on one thing. Really, I think the one thing that makes a Bitcoiner is that we can all agree that it is a civilizational priority to separate money from state.
Well said, Hunter. Rob, do you want to couple that?
Yeah, I think just Bitcoin, Hunter said it beautifully. The reason why Bitcoin is a unique problem is the code is the money. So unlike other systems where you have a bank, you can just update the database, roll back the server, what have you. These are good, important questions that we're grappling with about how does Bitcoin evolve as technology enabled by AI and that accelerating quantum computing. Me personally, I would say I'm skeptical of the exact timelines of everything. I also just personally do not like being short the innovation of humanity. And that is why I feel myself pulled to taking this seriously, because I never want to be in a position of they'll never figure out that thing, X, whatever that thing is. Because as a data scientist, I remember 10 years ago, neural nets were kind of like, they're a fun science fair project and not that great. And now it's the cornerstone of like all of the global capitalism growth like that's happening right now. So I always try to be very careful about they'll never figure out X thing, whatever that thing is. All that to be said, I think a lot of I've even learned a couple things today. There's a lot of really great research being worked on. And another great, I think a really great just shout out too is the ARK Invest paper that you guys co-wrote with Unchained Capital is a great resource for an investor perspective of looking at the high level domain of what is the problem, what are the possible paths forward. And I feel confident and in good hands with Bitcoin. I still have my life savings in Bitcoin. Nothing's kind of dissuaded me personally. I think this is just a beautiful part of an open system evolving to technology as it advances.
Totally. And same here. My time, capital, reputation is all in on Bitcoin. So let's keep going. Ren, speaking of the research, any thoughts to leave the audience with?
I think one of the most challenging aspects of Bitcoin is actually communicating the nuance to the institutional investors, like the mass market, like the broader world, because there is no like single company that can just say like, this is what Bitcoin is going to do. Bitcoin is more, here are 5 to 10 paths that the protocol and network might take. And here are the trade-offs between those paths. And then ultimately, all of the various stakeholders are weighing these things in their head, and they're going to make their own choice. And eventually, the network is able to get to a place of rough consensus to move forward. So I think the more podcasts like this that happen, the more pieces that ARK puts out, trying to like convey the nuance in a way that is still digestible, like that is probably one of the most important things to do. Because on the technical side, there are brilliant people like Blockstream, Spiral, like developers and researchers who are spending like days and nights thinking about this. And the key thing in my head that I spend a lot of time thinking about is how do you translate that work and make sure it gets conveyed in the right way to the broader world.
Yeah, I think rough consensus is something we need to like double click on continuously throughout the entire, I hate using even the word marketing of this, but just rough consensus. So really well said, Ren. Thanks for joining us. Adam, back to close us off.
Bring it home. Bring it home.
Yeah, I mean, I think, having spoken with a number of custodians, public companies, and technology providers over the last month or so, we were at the Vegas Bitcoin conference, the Consensus conference, and then some meetings in New York with different custodians. That the investors are concerned, and I think that, of course, we talked about the sort of fiduciary obligation to consider long-tail risks, but also this is being immersed in the space and ARK themselves having, quite a lot of capabilities in digging into technology, looking at trends, putting out reports, that for the investor audience, it's actually, this is all very esoteric, right? already cryptography itself is inscrutable to the outside observer. We forget this is, incredibly detailed. The consensus forming process about the Bitcoin development process, that's related to the IETF, but people won't know about that necessarily. And then you've got the progress on the physics research that goes under the quantum computers, which, as a few people indicated, is actually a multidimensional progress, right? There are different candidate architectures which are better or worse at different things. So one may get somewhere on one track, but be completely useless on another. And so you really got this kind of matrix or, rows with tick boxes about how good they are. So my view is actually more in line with what David and Cathie outlined in terms of, the rate of progress and timelines. I coincidentally lived in Montreal, where many of the early kind of mathematical work on quantum computers was done at the universities there. And so I got the opportunity to attend some sort of lectures from some of the top researchers about quantum computing. I think this was in 2001. So I was loosely tracking it for 25 years now, right? And it's really progressed like very slowly and linearly. So, there are interesting research results. There continue to be evolution of that, but we still don't have a scalable architecture. I think the benchmarks are wrong. We're talking about benchmarks, but realistically, they don't have many logical qubits in an architecture that actually can execute for very long or do very much. So probably, I'm not sure if it's the case that a quantum computer has ever added together two 32-bit numbers, or maybe even two 2-bit numbers, for example, right? And yet we have these using logical qubits with error correction, I'm talking about, right? Because, you might have 100 qubits, but, how long do they cohere for, and how many logical qubits can you construct out of that? So I think it'd be very useful to have some neutral proposed benchmarks that are less optimistic than factorizing 15 or something like that, which has no error correction, and so it's not really meaningful. So, it's a little bit challenging because it's hard to construct a benchmark with something that doesn't, if you have very, very short runtime, you don't need the error correction. So it's sort of a bit tricky to design a fair benchmark, but I think that would be useful so that we can, it's just an honest interest to see, some observable benchmark of how actual execution capability is tracking over time. At the moment, the execution capability is basically zero on an error-corrected basis. And so, the benchmarks we have are not meaningful, unfortunately. So that's one track. And then, I think the overall summary is that it's very complicated, and so it's hard for the audience to digest, and you've got the phenomena that negative news sells. And so I think, the kind of conversations here, I'm really pleased that ARK Invest, which has an investor audience for, your research reports and obviously investors in your funds, is taking interest in adding some balanced content to kind of offset the media's tendency to sort of over amplify a negative news, which is, in my view, not balanced, like overblown and sort of premature. But I think the correct way, and the way we've looked at it, is we're not the marketers, we're the builders. So if we build a solution, show the progress that, there's a candidate that could get implemented, once that kind of initial migration capabilities in Bitcoin, then, we can just go back to calmly looking at the benchmarks and planning the next steps, right? So rather than arguing about, is it 2050 or 2040, who knows, right? But let's just get ready. And in any case, a long period of time is great, because then we have more data before we have to act. It becomes much more plausible to do the unthinkable, to Rob's point of view, that we would, deprecate a signature algorithm if there's a decent evidence that people have had, let's say a decade to migrate and that they probably lost their coins. So I think that's, it's all positive, but we've got to get some more balance and science-based approach to the benchmarks.
Yeah.
And can I just say, shout out to Rod. He pulled us all together for today. So thank you so much. And Adam, we're going to take up that challenge of figuring out the benchmark, if at all possible. We will, right, David? We will work with Brett, who did the Big Ideas piece, and try to get to the right answer. Even with AI, it was from a Wright's law point of view, it was tough. We needed years to figure out the benchmark. We don't want to take years to figure out this one. So,
yeah,
Totally.
yeah, that's the idea. It's a multifactorial issue, very complex because you have, 4 layers of the quantum stack with different tech, AI in the mix, helping with R&D and the system integrations layer potentially, and then you have other stuff. But we're working on it, and hopefully we can come up with something fair.
And I'll close with this. Cathie, you said it best early on. It's just like convergence that's all happening across, from the Bitcoin world, the AI world, the energy world, and so on. And I think I'm a glass half full person, and what a time to be alive. So again, thank you everybody for joining us. And there's going to just absolutely more to come. So cheers, everybody.
thank you, Rod. Thank you, everyone.
ARK Invest is a registered investment advisor focused on investing in disruptive innovation. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. It does not constitute, either explicitly or implicitly, any provision of services or products by ARK. All statements made regarding companies or securities are strictly beliefs and points of view held by ARK or podcast guests and are not endorsements or recommendations by ARK to buy, sell, or hold any security. Clients of ARK Investment Management may maintain positions in the securities discussed in this podcast.